Here's the bid and ask. Market's opening up right now. It's 740. I told Tina they're coming up to that 755, 775. That high was at 795. That's where that call hits up on the top side. We talk about this side of the market coming down into the 6.5 area, and that's that put side. That's that 350 put. Now, when we are on the opening bell, I will go and pull up that Apple. It's got that premium gap. That means that this side comes down. This side makes a bottom, and we're going to have to find out where we have. It's going to take, a little while here to see exactly how the equity, but they got right up toward my top side to the penny. And this side here is coming down in value, down $1.25. We can't even think about this side until we get down into the 5.5 range, right, Tina? And that's $3 below the hip. So when I'm buying wholesale $3 below, this side is going to put its high in. So the next area on the call side from that hip side is going to be 860 by 875 as we roll up in there. This side here, as I said before the opening bell, is going to come down in that 5.5 range. We got to the low of that 675 handle. You can see the bids. And I'm going to go put this on pause now. Once again, we're defining a weekly 340 call. We can see that 6.55 was the close. We can see that the high was 8.35 right here on that 3-minute pullback in the platform. As we set up, we look at buying the lower end of the premium as a risk premium trade with risk premium stop, so that we're taking that smaller order, Brian Plain, start getting in it, put it out there at 7.25. It's still a 20-cent premium and at about a 75-cent premium, but you're buying $1 off the high. So, Chuck?
Yes.
Get ready to look at, and Brian Plain, do not wait to buy it. Do not buy it at 780. Do not pay up. Do not pay up. If you're not in it now, you got to scale the bottom.
I got 3 at 30.
All right, now you got it, and that's all I want you to have. And I got to keep the volume light as this sets up the 3, the 6, here's the 9. The 12 is coming in. And in order to say that this is going to go higher, when I open up your platform here, you got to close above half of the bar right there. And that's 345.91. And you're 345.33. So you're not totally above it yet. And the entry right here was warranted for the simple fact that you weren't buying the high of the contract, right? Right, Anthony? But getting a lower end entry down here. And now with the platform to verify the price that the bid will hold between the bid and the ask, the buyer and the seller, is that this has to go north of 35, as you know. And you go higher. Now, when you take a look at the swing low, it's 44.67. And we're almost $1 off of that, which confirms that 3.5. 3.5, you got to go north of 45 to get these back up to the high. And if that happens and you close above the half bar, you're going to be working on a 15-minute buy and sell transaction. You're going to learn that taking the entry from the wholesale bid here versus the retail there, that's the closing price. The application is kicking. We got entries. This is the glory of understanding how do I take my first entry at wholesale versus buying up here at the high on the open. Everybody ran in there. 11 under contracts traded. We haven't even been open. We're only open 12 minutes. But the majority of the overhead supply was bought up here. And my MMT entries are 710, 720, and 730. And right now, we're at 760 by 780. Now, on the other side of that coin, when you take a look at the 350 in the money, when you take a look at a put option in the money, this side of the premium goes lower when this application is ripping right now. I'm long Apple. I got the call, But that put option, which is in the money, I'm going to set a bid down there at 5.25, which is about 3.25 below the market, which would allow me to buy that wholesale entry against this entry here. So now I'm diversified within the actual range itself, with the equity moving itself. Here is the equity. So let's put the option here. Let's put the equity here. And let's put the chart up here. And why we are long Apple off the computer. Now, when I told you that you were right there at that crucial level and 25 or higher warranted transaction. If you did not make the transaction, too bad. You're not getting paid. This is how you get paid, buying that drop down from the opening price volatility from 835 down to 705. Brian Plain is in the order. I got several other people in this order, and they're wholesale to the market. Right, Tina? I cannot hear Tina.
Yep.
Are you wholesale?
Wholesale.
And is the application burning? Is it taking advantage of that sell gap, taking advantage of that wholesale entry? And remember, talk is cheap. This is right now.
Mm-hmm.
This is now. And, Brian Plain, you got to get north and you've got to stay elevated. This half bar right here, right there, Anthony, is 345.79. And you're 346.05 by 15. And guess what? Those people down there trying to use their flash trades is this right here. If this doesn't keep, this has got to maintain a level of 65 or higher. Right here, right now. And as it does, you're going to have to take out this bar, meaning that this previous bar is 345.84. That's half bar support. This half bar right here, though, on the other hand, is 345.79. And you're slightly above it there. It's all calculated right here. Okay? And it's all calculated right here. So on a short term, 369 with the 369 back toward the high of this half bar, if we don't start building on it, this thing's going to have to maintain an IR above 65 for that to hold. If it doesn't, you take your profit, and you come back in, and you get another entry. Okay? And that's all price volatility in the opening bell. The 350 put, they brought it down to 620. It hasn't broke the low. So, Brian Plain, you got to sell into the strength, because if this thing is below 65, it warrants a transaction, take my profits, and then get back in again. Because that's what's happening in that element. You got to close.
I'm out.
All right. So get back below the market, because if you close below the bar, it's all about the closing below it. It hasn't closed below it, but I am a firm believer that when you get a wholesale entry and you got a positive profit, that you take it, because once again, you're working in a very precise electronic tape. Put your order back out there at 710, young man. I'm going to conclude the opening bell with learning how to buy a 350 put on a weekly option with a nice 340 entry within the range off of the retail high to the wholesale entry to the wholesale exit. And once again, it's all about not after the fact. That's, everybody loves that. You know, all your friends on TV there and all your little day trade. Oh, yeah, I could have did this. I could have did that. That doesn't get people nowhere. That's very destructive.